The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. A little mindset reset video as well as a technical video. And one thing as we get started to give you a takeaway before we start, some homework to really think about exactly understanding what it is that you're doing when you go to the screen each day. Today we want to put the emphasis on your daily process, your daily routine, building your watch list, and the understanding that you're hunting the same setups on any instrument where it's really easy for you to make money. And in between doing nothing else, not any random, impulsive, degenerate gambling type of retail, amateur day trading type of behavior. Shifting your mindset from trying to figure out how to trade markets to finding the same setups where it's really easy, or you have a high percentage of probability / possibility of a successful money-making opportunity. And then the next component, of course, is developing your skills through live time, through repetition, through the daily process of filtering out the best instruments, and then building your muscle memory on templates that make money. Not guessing, not hoping, not wishing, but developing the skills and repeating them over and over and over again and mastering those skills in live time. Building your muscle memory through repetition. So today I want to put the emphasis on the playbook setups. We've talked about repeating the same signal days over and over and over again. Markets only do 3 things. If you're not sure what they are, go back and watch any of the previous videos. I repeat the same things in every video because markets only do 3 things. Traders, on the other hand, do all kinds of things inconsistently. They just never stick to a plan. And I keep emphasizing stick to a plan. Hunt out 1 or 2 repeatable, scalable, simple opportunities on any instrument each week if they present into your session. Now, we're going to get signal days on any instrument. Now, if you're new here, I want to say this before we proceed, is that it doesn't matter what instrument, what market you trade. All markets are the same, and they all only do 3 things. They break out, they pull back, they continue to trend. They break out, they fail, and they reverse, or they stay in a larger trading range. Keep it simple. Markets only do 3 things. Every single market is the same. It's whether or not, number 1, the phase of the market, your favorite instrument, what it's in. It could be in a range-bound market. It could be in a market that's breaking out and failing and reversing. And there are different types of opportunities. We're going to have all-in opportunities, we're going to have session opportunities, and we're going to have scalping opportunities, nail and bail. But all markets do the same things. So the playbook is based on this criteria. And then the next component is actually training yourself, as I said earlier, not to engage in impulsive, random, degenerate gambling type of behavior, emotional behavior, frustration, hope, YOLO, whatever you want to call it, but developing your skills and becoming a sniper, an expert at your craft. As I've mentioned, traders think that they can, learn from watching, but if you're a degenerate gambler or you have no clue or no daily process of what you're actually hunting, then you'll be a degenerate gambler no matter how many videos you watch live. You don't learn anything from watching. If you believe that, you're at the wrong place. You don't learn anything from sitting watching. You have to build your muscle memory through repetition. What setups are you hunting? What instruments are on your watch list that are potential candidates that are potentially going to set up into your session for either an A++ setup, an all-in high of week, low of week opportunity, or vice versa, or a session range trade, an A++ setup, maybe from high of day to low of day? Or is it a session scalp? The train's left the station and we have low-hanging fruit for a nail and bail, easy money-making opportunity. I'll repeat, the important thing to understand is that we get signals from the market. And I repeat the phrase daily, day 3 breakout traders in the markets, whether we're going long or short. First red day, first green day, inside days, larger 3-day rectangles, the day 0 template for range expansion opportunities. Daily time frame is the smallest time frame that I am looking to target on a trade setup. Signals, setups, timings, levels, behavior of price. Repeating money-making setups. Read this, not chasing movement. And the best part is it's any instrument. It's irrelevant. Do I have a setup? Any instrument. What setup are you hunting? Some traders I'm short biased. I like to trade reversals, but I'm long biased the indexes unless I have a short selling setup. Currency pairs, energies, indexes, metals, whatever it is, it's irrelevant. Cryptos, any instrument, where is the setup? And then on the day, is it an A++ setup for an all-in high of week, low of week opportunity? Is it an A++ setup? A daily range, high of day, low of day, low of day, high of day? Or is it a session scalp? The market is in a strong market breakout, but it's offering me a session trade, a session scalp, a low-hanging fruit, or a stop hunt, parabolic opportunity. But read this bottom part. These signals are based on daily charts. I can have 3-day setups for all-in opportunities or session trades, or session range trades. I can have a 3-session setup for a scalp or a A++ setup, high of day, low of day opportunity, or vice versa. It all comes back to a very simple process. Everything starts on Monday. We have signals. We may have a signal on a Friday, and Monday gives us a signal in line with that. But it's very important to understand what you're hunting. Otherwise, you're just going there to take trades. Taking trades is 50-50. I'm looking for 90-10 repeating opportunities. 90-10 repeating opportunities. And we go over this in the playbook, why most traders lose. Traders have taken the playbook and they've diluted it down into all kinds of stuff and called it their playbook, and they're chasing movement. Nothing changes. Markets only do 3 things. It's the same thing every single week. Which ones are giving me the setups in the session that I'm trading? Now we'll look at some simple examples from the week, and it's really important to emphasize simplicity. Not chasing candles inside. I'm not worried about little bars and pushes and everything else. Remember what I said, signal days. So we had a market that closed in breakout on Friday on the euro pound. Just as an example, we had a higher time frame, high of month level, and Monday the new week breaks out and goes higher again, closing in breakout on day 2. So we have Friday closing and breakout, Monday closing and breakout, our opening range. Another thing that people have done, if they changed the day count, it's this and that, and day 1 and 3-day cycles. It's Monday, Wednesday, Friday. Monday opens the week. It's really simple to think about. Monday is the beginning of the week. Friday is the end of the week. Wednesday is the middle of the week. Friday's closing price is where everything is based on when Monday morning opens, and it establishes a new high and low in the new week. Day 2, Tuesday, typically expands that range. We can get false break reversals. We can get range expansions. We can have inside days, which is a signal day. Wednesday, day 3, midpoint range and a reset. We restart the count heading into the closing range of the week. Day 1, day 2, day 3. Friday closes out the week. We can have trending weeks, we can have pump and dump weeks, we can have dump and pump weeks. But we're looking for signals and then whether or not we have setups. In this particular example, just for simplicity in this video, as I've gone over in several higher time frame videos, they're on the playlist on the channel here. And for traders who are in the playbook course, each week I've been adding in more PDFs of the current weekly repeating examples of best trade candidates. So there's multiple PDFs in the course. In the very first section underneath, I keep adding the new ones in. They're all in there. But understanding for shorting examples, we're looking for ideally the A+++ setups. But in between, I'm looking for A++ or A+. 3 session setups, a 3-day setup, an all-in high of day, low of day opportunity, or a session trade. Now, in this particular example, I'm just looking at short examples, but the same process applies in the long direction. Just before we go over a couple of examples, I want to emphasize to traders 2 to 3 high percentage opportunities per week can significantly compound your trading account. And then learning how to scale that up in size, developing the skill set, the patience, the discipline, and the mindset to just sit on your hands in between and hunt out the same repeating opportunities every week. 2 to 3 trades are all you need. And if you get the month money trade, the monkey hammer, the ACB, then that can give you month money. Keep trading simple, pleasurable, and highly profitable. Rinse and repeat money-making setups. And train yourself to not be engaging in impulsive, random, self-sabotaging behavior in between. Euro pound is an instrument that would have come up on Trader's watch list on day 2, Tuesday. It breaks out again and breaks down in the Europe session. Now, day 1 breakouts on Friday. Day 2 breakouts on Monday, the opening range. Tuesday, day 2, we're at the high of week level heading into our Europe session. An important thing for traders to understand is your mindset. Now, there are traders who have built their watch list for instruments that have given them signals. Other traders are sitting there going, looks good after the fact, anyone can do that, except they stare at the same instrument or they've got 20 charts open and they're chasing things that might be moving. Whereas other traders have built a watch list of instruments that have given them a signal, whether they're trading Asia, London, or New York, and whether or not now it has a setup in their session. And then traders say, well, let's see you do it live. But they don't even know what they're looking for. They don't have a daily process or routine. And then on top of that, they have no idea, is it an A++ setup, an A++ setup, or an A+ nail and bail scalp? Where do I take profits? Where do I get in? They've never built their muscle memory. They haven't done their homework. They have no emotional control. They may have other external factors in their life that are causing them to think they need to make money today, and they treat it like Jesse Livermore says, like it's a day job and I need to have regular wages. They don't understand the concept of being a master of your craft, building your trading business on setups that make money, and then hunting out those same setups. They're not worried about mastering every little movement a market makes and how I can catch that move. Where's the same setup that repeats on any instrument that I can make money on? Therefore, you will understand how hindsight pays. And instead of talking about hindsight, you will master it and become a master of one kick 10,000 times and not trying to master every movement 1,000 times. Do you really think you learn anything when you don't even know what you're doing? Taking trades is for 50-50 amateurs. Mastering money-making setups is what professionals are. They master their craft, and then they sit on their hands in between, and when their setup presents, they execute, they lock in the money, and they walk away. That's called rinse and repeat, and they come back again the next day, and they hunt out the same opportunities. Now we have our signal we head into our Europe window, and the market has broken out again and broken down back inside. Now, page 29 in the playbook, we put together a very simple model to remove analysis paralysis when the signal and setup presents. Now, what traders have done is they follow the basic model all over the place, and they say, well, it didn't work, except there's no setup, there's no signal, they're not in their timing window. We have a signal, we have a potential setup, we have our levels, and we have our timing window. London breaks down from the high of month, week, and daily level after our signal, and we're day 2 on the front side, and we now have a market that is offering traders a session scalp. Now, the reason why this is a session scalp is it's a CPI day. We have CPI scheduled in the U.S. session for 8:30 New York time. So we have a session A+ set up in the Europe-London window. We have CPI in our U.S. session, and the market breaks down again just prior to our New York Open. After CPI, the New York Open pumps back up into our broken down market, engulfing and giving traders the A+ low-hanging fruit continuation trade. Now, we have 2 levels that traders will acknowledge. The breakout level from the previous high of day, session trade, A+ high percentage probability/possibility session trade in the New York session. Daily signals, then how does price set up at the daily levels and whether or not it sets up into my session. The train has already left the station in London. New York gets the low-hanging fruit continuation. And purely from observation, you'll see that Friday's closing range, where the breakout occurred on Monday, becomes a max take profit area level if traders hadn't already locked in the money. Repeating, markets only do 3 things: breakout, pullback, continue to trend, breakout, fail, and reverse, or stay in a trading range. There is nothing else going on. But what setup are you hunting where you have a 90-10 edge? So we had a signal on Monday for a day 2 trade on the euro pound. We have the euro yen closing in breakout on Tuesday, day 2. Friday also closed in breakout. If we just back this chart up, we can see that Monday pushed higher, then Tuesday closed in breakout of Friday, the closing range of the week. On Tuesday, the euro yen closed in breakout, bringing this instrument up on traders' watch list. The market trades higher in Asia before breaking down just prior to the Europe Open. Remember, signal day, traders put it on their watch list. It pumps up and breaks down prior to the Europe Open session. Europe Opens, breaks down and pumps back up into the London Open, into the high of month, high of week, high of day level. How does price set up on the day? Now remember, levels, daily levels, hindsight pays, building your watch list, not coming to the screen each day looking for something that's moving. Which instrument has given us signals? Put them on your watch list. Then when you come to your session the next day, does it set up for you in your session for a 90-10 trade setup opportunity? And we just talked about markets only doing 3 things. Have you built your muscle memory on what a best playbook trade setup looks like? Now we'll zoom in here for traders to have a closer look. We've already had a market breakout and pull back inside. We have our London session open, pumping back up into the high of month, week, and day level, and our trap and shift template. Now for traders who are struggling with this, number 1, I want you to think about timings and levels. We have our signal, we have our setup, now we have our timing window, our levels, and then we have our pin hammer. Entry, stop loss, and a take profit level. If we have a break-even level and traders feel that on Wednesday, day 3, the midpoint range of the week, that we have a reversal template that has the potential to go from one side of the daily range to the other. They may choose to go to break even once a level has traded through, and then either locking in profits at a predetermined level, not on the fly, a predetermined level for taking profits, or exiting a time-based take profit level. Level to level, an A++ opportunity for traders in the London session. Now, this is where traders get caught up. They chase the move in the U.S. window or later on in the day. They obviously may want to trade that and take the parabolic collapse, but you're trading down low. You're trading down low at the end of the day. And this is where traders get caught, chasing movement. The trade is up here at the top of the box. At the top of the box. Signal, setup, timings, levels, behavior of price, behavior of the trader. An A++ opportunity on Wednesday this week. Now, while we understand that, we head into Thursday, into our Asian session, and we have traders that have brought this pair up on their watch list because it closed in breakout at the end of the day. Again, a market that closed in breakout at the end of the day. Let's go back to our higher time frame template. We have a market that's broken out, making higher daily highs and higher daily lows. It breaks down and closes in breakout. But let's go back to our simple understanding about opening range and initial balance. Monday is our opening range. We broke out of the closing range. Markets only do 3 things. They break out, they expanded the range and went higher. Day 1, day 2, day 3, reversal, and we close in breakout back inside of our opening range. How does price set up into our Asian session? Building your muscle memory helps you understand day 1, day 2, day 3, front side, day 1, day 2, day 3, backside. We've closed in breakout. Our Asian session begins to trade, and we have a simple entry criteria for a session scalp, an A+ reversal opportunity in our Asian session. Now, I'll keep saying the same things over and over again. You can make trading a pursuit of pleasure and a profitable one, or you can go to markets every day and look for trades. Now, we're just using signals. Markets give us signals, breakout, pullback, but we also have low-hanging fruit caught down in the U.S. window, trading down low, chasing the trend. Page 29 in the playbook, our basic model for trade entry criteria, gives Asia session traders the reversal opportunity, a nail and bail session scalp. Now, we can have markets break out on the day, which we had this week after Aussie high impact major red news caused the markets on Thursday to break out, Australian crosspairs to break out. But let's just go back to some simple things. Levels. We had a market break out of a weekly level the previous week, closing in breakout. When markets have large ranges, we have higher time frame, in this particular case, selling going on. Opening range, initial balance. We have a day 2 reversal, just keeping things simple. Breakout, pullback on day 2. Monday closed in breakout and gave us a first green day signal against a broken down market. Higher highs and a day 2 reversal on Tuesday on the front side of the week. Wednesday, our midpoint range of the week, breaks out, pulls back, but explodes on high impact major red news. 3 session setup, potentially setting up into our New York window. A market that has broken out on the day at the high of week level, and we're in breakout still heading into our US session. How does price set up on the day? Now, we had the Australian major red news in the Asian session. This market breaks out, continues to break out, and reverses. The last area that failed in breakout was in our Asian session. We have a peak formation before pulling back It's attempted to go higher. It has failed and broken down. It has not taken out that high of day level. It breaks down again into our New York session. Again, signal on the day, market in breakout, high of week, high of day, high of week. We had 8:30 a.m. New York time major red news. Basic model for trade entry criteria removes analysis paralysis. A simple model for a session scalp at 9:30 New York open. Entry, stop loss, take profit is hold till close. This is a 3-session setup. We're on the backside of the week. It's Thursday, not Tuesday, not Monday, not Friday. We can hold this till close. We have a market that has broken out, reattempted to go higher and failed, given us a short reversal setup into our New York window. It's an easy A+ session scalping opportunity. Monday gave us a signal day on the Euro Canadian. It was an inside day. Page 69 in the playbook. Now the great thing about this signal day is it came after a larger outside day range, which gave us a first red day signal. Our low of week level is down below, and we have a market now that is potentially offering us a 5-star A++ setup. Now, why is that? Because if this market gives us our setup, it can go on a range expansion. And that's the all-in opportunity, a version of an all-in opportunity from the playbook, the A++ range expansion. First red day signal, the inside day, we can be looking for the false break reversal. Now, traders, again, have put the instrument on their watch list. Why? Because it's a signal day. If they were hunting this opportunity, then we had CPI into our US session. So traders in our Europe-London window have the opportunity. Again, simple model. False break, guess what? They don't let anybody stay in the money. It reverses quickly. Traders keep asking, what's the difference between a false break and a trend trade? I don't know. Go back and study. A false break does not allow traders to stay in the money. It may be out for 15 minutes. It might be out for 30 minutes. But it breaks out and reverses. It does not allow traders who are chasing that trend to stay in the money. They want to trap breakout traders as well as traders who are caught on the wrong side. Basic target heading into CPI is to just use a 100% expansion of the range. If it has not hit that prior to CPI, get out of the market. Get out of the market. CPI could spike up, can spike down, it can gap, it can do whatever. It's a high impact major red news event. But after CPI, guess what? We go back to work. Simple model. We're already in line with our false break reversal. We have a pin hammer into our 9 a.m. hour for the easy continuation trade. Also targeting a range expansion opportunity. If traders saw this opportunity and understand that it is a range expansion potential, they could be scaling in, going to break even, and be willing to walk away with the thesis that this trade now is going to close. Again, if they chose to lock in profits, we can call this a first bounce opportunity. Page 101 in the playbook, in line with a higher time frame template. But there's major red news first. We wait for the news, and then we can position ourselves in line with the existing higher time frame template, setting a profit target and a break-even level if we choose, so that we can set and forget that trade setup, locking in any profits at a predetermined level or holding till close. These are just a few examples of opportunities that presented this week. And the important part for traders to grasp is it doesn't matter what basket of instruments that you're following. Markets only do 3 things. The opportunities will keep coming, but the trader themselves is the variable as to whether or not they stick to a plan, they're hunting rinse and repeat money-making setups, or if they're just randomly, impulsively looking for trades. The important part is if you are a master of your craft, These opportunities will continue week in and week out. If your basket of instruments is large enough, the opportunities will be abundant. You'll have your A+++ setups, your A++ setups, and your A+ setups. Which setups are you hunting? Which instruments are you following? If you don't have a plan, you're planning to fail. If you aren't hunting money-making setups, what are you doing? What are you looking for? Where is your edge? What do you do day in and day out to make sure that you're only hunting that edge? And what do you do in between to make sure you don't engage in any random, impulsive, degenerate, self-sabotaging behavior? The number one reason why most traders will fail. Keep things simple, traders. Hunt out the opportunities where you almost can't lose, and then learn to do nothing else in between. Have a great weekend, traders, and may the markets go with you.